Welcome to our channel. If you're a returning viewer, welcome back. Nice to see you again. And if you're new here, please show us support by giving us a like and subscribing to our channel. We highly appreciate that. Thank you so much. Now, without further ado, let's get into the video. No one enjoys paying taxes. So, no matter your income level, searching for new tax breaks can be a wise use of your time and energy. The ultra-wealthy, however, sometimes take steering clear of taxes to another level. Former Treasury Secretary Lawrence Summers, along with finance professor Natasha Sarin, recently released a research paper with some eye-opening claims. According to Summers and Sarin, the top 1% of taxpayers are projected to avoid more than $5 trillion in taxes between 2020 and 2029. Of course, the legal tax reduction strategies used by rich people are worth reviewing and utilizing when possible. But it's not a bad idea to learn about the illegal methods as well, so you can avoid them and their potential consequences. Business deductions. Starting a business or multiple businesses is a common way the rich aim to reduce their tax liability. But you don't have to be wealthy to use this method, notes John Dolan, founder of Money Smart Guides. If you have been wanting to give entrepreneurship a try or even formalize a side hustle, this may be a good option. Of course, you have to go through the proper channels first. Creating a legal business entity typically requires a simple visit to the website of your Secretary of State and the IRS. Once you establish your business, tax deductions are just one of the benefits you may be able to enjoy. For starters, you can write off losses the business incurs in the beginning and then use business expenses to offset business income to lower taxable income, Dolan says. Additionally, you can put money into tax-deferred accounts, like solo 401k plans, which allow the business owner to save a lot more than traditional 401k plans since you are contributing both as the employer and the employee. Hiring family members. Another tactic the rich often use to shield income from taxes requires getting the family involved. If you have a business, you can use this strategy to your advantage too by hiring your spouse or your children and paying them a salary. The IRS even says that one of the advantages of operating your own business is hiring family members. So, how does this help you exactly? Your business gets a write-off, Dolan explains, and your spouse or child can put the money into tax-deferred accounts. These accounts may further protect the money from taxes. Just be sure to follow the rules, like withholding any necessary payroll taxes. Vacation homes. Vacation homes are another way the rich may opt to shield cash from Uncle Sam, says realtor Brian Vance, founder of Bucks and Cents. Vance explains that with the recent increase of the standard deduction, a lot of homeowners no longer itemize popular items such as mortgage interest on their primary residence. State and local income taxes, along with property taxes, are limited to $10,000 if you opt to itemize. But that's not the case with a vacation home, should you choose to let others stay there, Vance says. Rent your vacation house for less than 14 days a year, and the rent you earn is usually tax-free. Rent out the house for more than 14 days a year, and you can deduct expenses like mortgage interest, property taxes, maintenance, depreciation, etc. Real estate tax deferment. When the wealthy sell an investment property like a vacation home, they may use another tool to help them pay less to the IRS. Jim Vang, founder of Best Wallet Hacks, explains how a 1031 exchange may help you put off the cost of capital gains taxes when you sell an investment property. If you purchase a like-kind property, you can defer capital gains on the sale of investment real estate, Wang says. The logic behind this deferment is that you are swapping one investment for another, so the IRS lets you defer the gains. If you want to defer your gains and postpone paying taxes on them, you'll need to complete a 1031 exchange. Eventually, you will have to realize those gains, but until then, you can keep exchanging and grow your real estate portfolio without the pesky tax hit after every sale, Wang notes. At present, there's no limit on the number of times you can take advantage of this special tax deferment. Life insurance. Permanent cash value life insurance, like whole life insurance or universal life insurance, is another place the rich put their money. Chris Abrams, founder of Abrams Insurance Solutions, says life insurance is an excellent way to eliminate the tax and the market risk present in other assets or investments. Contributions are not limited by the government, like with 401ks and other qualified plans. Abrams explains. He also points out that when you take money out of your life insurance policy, you can remove it as a tax-free loan against your policy's death benefit. Since it is a life insurance policy, there is still a death benefit if something unexpected happens. Of course, there is some risk involved. If you pass away while you still have an outstanding loan against your life insurance policy, the insurance company will take the debt you own out of your death benefit before distributing any remaining funds to your beneficiaries. Also, if you borrow more than you paid into the policy in the form of premiums, those funds may be subject to income tax. Offshore accounts. No list of the many ways the rich hide their money would be complete without mentioning notorious offshore bank accounts, such as those commonly used in the Cayman Islands, Switzerland, or Singapore. According to Pedro Nicolasi da Costa, writing for Business Insider, the ultra-wealthy currently have around 10% of the global gross domestic product, or GDP, hidden away in offshore tax havens. Such tax havens, which often enable the wealthy to get out of paying their fair share on taxes, can contribute to income inequality in both the United States and around the globe. And here's a particularly sobering tidbit. By 2017, the United States had returned to roughly the same income inequality levels seen in this country during the Great Depression. While offshore accounts aren't illegal in and of themselves, they cross the line when people set them up for the purpose of tax evasion. And these were just some of different ways that rich avoid paying taxes. If you know more ways that rich use to avoid taxes, comment down below and share your thoughts. Surely this is not a recommendation to avoid paying taxes. This video is only for informational and entertainment purposes, so please take it as such. That was today's video. Thank you so much for watching, and I hope you enjoyed it and that you learned something interesting. Make sure to comment down below if you have any of these traits and what of these traits describes you the best. To show us support, please give us a like and subscribe to our channel for more similar content. And I will see you in the next video.